All right. Good morning, everyone. Hope you guys are doing well. It's 10 a.m. Let's go ahead and get started. All right. For those of you watching on Zoom, you can type in a chat box if you have any questions, of course, after we're done. And for those of you on YouTube, feel free to type in any comments or questions you may have going into this particular market update. So anyway, once again, good morning, you guys. 10 a.m. Eastern time, about 7 a.m. Pacific here. And so let's go ahead and get started. So what a crazy week. Okay, so let's just dive right in. What is the big news this week, right? I mean, obviously, we had our most anticipated FOMC meeting of the year. It seems like every FOMC meeting is the most anticipated meeting of the year, and this particular one did not disappoint the Bears, at least, right? We saw the action on Wednesday when they came out with the decision. It was like instantly sell the news. It was 75 basis points. But as soon as Powell got on stage at the press conference, the market did rip for a good 15, 20 minutes before completely selling off. So, sorry, I'm going to mute everybody. One second there. And so the market sold off, and we're continuing to sell off into some supply or potentially support areas. So we'll take a look at the charts this morning. But the main thing that I think spooked the markets, while in the beginning of the press conference, Powell didn't sound as angry as he did during the Jackson Hole speech, if you noticed that. So I think part of that was the reason why the markets ripped up after the initial reaction. But then eventually, as the press conference carried on, he did say that my main message from Jackson Hole has not changed. Okay. And he said a few other things as well. All right. But that was his main message, right? Is that, hey, we're not letting up. You guys are crazy for thinking we're going to pivot. In fact, we're going to go ahead and increase the rates even more, potentially data dependent, obviously. That's what he said. But as you remember, back in August, when we did have a rally, most of the FOMC committee members did agree on a 4% rate, okay, going into 2023. But we now see that the message has changed, and the message is now potentially 4.5%. All right, target rate. Okay, so what happened? What's the result over the last couple of days in the market? 2-year Treasury tops 4.25%. 15-year high. Fed raises another 75 basis points. At one point or another, on Friday, the Dow actually dipped 700 points into bear market territory, and the S&P 5, or the SPY, almost broke support or almost hit a yearly low, which is the June low that a lot of people talk about. All right. So where do we go from here? All right. If you guys look at the CME data, the FedWatch tool, all right, they are now targeting us. There's a 70.6% chance that we're going to see this 4.5% target rate, all right, by the end of December or by mid-December. So there is no FOMC meeting in October. We just have to look towards the CPI data. But now, guess what, folks? The market's going to start pricing in this potential 4.5%, which could mean another 75 basis points in November meeting, and potentially 50 basis points in December if the CPI remains sticky, et cetera. A lot of data has to go into that. But so far, the market is looking forward to December at this point and what the final rate hike or rates are. All right. So let's continue to go through our charts here. All right. We can see that this is the S&P 5 SPX weekly line chart. Okay, folks. This is 2018. If you remember, my purple line here is the SMA 200. This is your SMA 50. All right. And you can see the SMA 50 is rolling over. At no point since 2018 have we dipped down, all right, under the moving average 200, obviously, except COVID. All right. So this is an interesting look. In this bottom here is the VIX, right? So the VIX hit 60 back in March 2020. All right. And we're here right about the 32 level. I think we're at the 32 level on the VIX as of Friday. All right. So obviously a lot to be concerned about, especially if you have long-term portfolios. If you are in a 401k that is tied to the market, things aren't looking very constructive for you. However, this pattern here is a downward megaphone pattern. All right. Things could get even uglier before they're going to get any better. All right. And as you can tell, I mean, with the major tech stocks, NVDA, we'll take a look at, we'll look at Meta, we'll look at Google, Amazon, et cetera. There just seems to be such a panic all over the market at this point. All right. Let's continue forward here. Now, I will have to caution you. Now, I'm not a bear or bull long-term short. I try to enter my day without any bias as to what the market is going to. I don't try to predict it. I just draw levels that I'm key levels of support, key levels of resistance, and we'll go from there. And it's a day-by-day basis, right, for us here in TRT. However, if you look at the McClellan oscillator chart, and this is very dependable chart. If you look at these oscillators, all right, number one, we closed below the lower Bollinger Band for the first time on this daily chart of the NASDAQ 100 since back here in June lows, okay? Back here in May, all right, it breached here slightly back in March, okay, and for the first time this year, we closed even further below the lower band. But check out your oscillator here that tells you overbought and oversold conditions. At this point, as of Friday, we are oversold just like the dip that we had in September, and we are more oversold than the June lows. Okay, so am I saying that we're going to bounce here? There's a good potential here, guys. All right, that could be some relief coming. The McClellan oscillator hardly disappoints. Now, when will that bounce come? Who knows? It could be Monday morning. It could be Tuesday. We can continue selling off. All right. That's all I'm saying. But the oscillators are pretty accurate here. This is the S&P 500. All right. We closed below the lower band here, 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 here as well. But you can see that when we breach this lower band, at least for at least for this year, for the last 9 months or so, there has been quite a bit of counter trend rallies back over above. Okay. If you look at the S&P 500 oscillator, we are more oversold on the entire year so far. All right. Now, you can make an argument that we're going to go much lower. The macros aren't looking good either, but that's not the style of trader that I am. All right. Or that we are. We just trade day by day basis. And by buying more puts or actually shorting at support levels, that could be disastrous too. If you're loading up on calls, at every single dip, that can be disastrous too. So we'll just have to play it day by day. But this is interesting, right? Look at this from Bloomberg. All right. This suggests that there were more put contracts traded than ever before in stock market history, at least dating back into the 1990s. All right. This is scary, right? Everybody is just hedging with puts, and you know what happens, all right, when the puts get too lopsided. All right. So we've seen counter trend rallies before. All right. So with that being said, that's the prefix or the preface to this particular presentation. And let's go ahead and look into the charts for this coming week. All right. Okay. So QQQ, let's just start there. My favorite, weekly. All right. We bounced off the weekly SMA 200. All right, just right on the money at 272 on Friday afternoon before a rally to 270, 275, 276. Yeah, you could say the shorts were covering. Okay, so there was a short covering going into the weekend. Markets are completely oversold. If you look at your stochastics and your CCI, we are in the oversold territory. Although I would agree that stochastics has a little bit of ways to go. All right. looking in forward looking, you have an air pocket, right? You have this deep gap, volume gap that is going to be a little scary. All right. We closed right above, all right, or right near the levels of the June lows, okay, which is a few points above. All right. But here in this area, if the markets do not pick up, if there is more panic regarding the 4.5% potential here, you're going to see the market break. All right. And there is the gap, volume gap, that is going to be detrimental, all right, for the stock market bulls. You have some support potentially, all right, at the 222 level. All right, we'll look at the granular charts in a second, but so far the SMA 200 is holding on by a thread. Here's the thing on Monday. If we revisit this low and it bounces again, there is good probability that the market will get some market relief. If the 271 or that 270 level breaks, it's going to get even uglier. All right. So you can start seeing, yeah, some folks have called it 250, 230 for the Qs at some point. All right. If you look at the 2018, all right, I'm not going to look into 2000 dot-com bubble or anything like that, but this is your 2018 picture. This is your COVID picture. And each time we have bounced off the EMA, all right, this teal line here, this is an EMA 200 line, and we have since broken that. Okay. Nothing, it just seems like the downward intensity is just getting worse. All right. For if you're a bear, fantastic. It's working out for you. All right. But watch out. All right. And in any case, there could be a bounce coming. Okay. Here's a more positive outlook. Okay. You have a daily hammer on the Qs with good volume on Friday. All right. So there was definitely some buyers nearly double bottom. You could virtually just call this a double bottom bounce. All right. It looks like the bulls were just waiting for the lowest of the day before jumping in. And it did towards the end of the day, right at the 272 level. All right. And here's the thing. On the daily stochastics, we are completely oversold. On the CCI, we are oversold as well. So what does that tell you? At some point, we're going to bounce, right? We have two gaps on the upside to fill nearly at the 278, 279 level, and a potential gap here at the 283 level or 282. Okay. So yes, you can see a little bit of counter trend rally before potentially another leg down. If you want to count Elliott waves, this could be wave 1, 2, 3, 4. And guess what? 5 could be much lower. Okay. But I would say that we're going to, if I were to put some type of target going into this coming week, I like to see this bounce. All right. Back to fill this gap at 283. All right. We got to clear this gap here. Okay. About the 278 up to 278.85. So we're going to put some upside targets for bounce play going into this coming week. All right. Once we get to that 283 level, then of course, once the gaps fill, then you're going to see, something like this, right? We're going to open up on Monday. We're going to, potentially fill this gap here, and then potentially come back down again. Those are all potential in play, but we do have a solid support. All right. We have a solid support at the 272 level. All right. So this is an area to watch. If this breaks down, then the yearly low, it will come pretty quickly. Then it could be, the selling could be even more intensified. All right. But let's see these gaps fill this week, and then we'll go from there. All right. Let's go ahead and head over to the SPYs. Okay. Another, once again here, SPY, nearly pretty darn close, right? 360 held on back in June lows on June 17th, June 16th. Okay. Once that breaks down, you don't have a ton of, there's just a lot of white space that has to fill. So if this level starts breaking down, look, guess what, folks? There's a gap here at the 339 down to 338 level. All right. So support would obviously be in the 350 range, 355 range. So this level has got to hold if you have long-term portfolios. But guess what, folks? Good news. Once again, you have a daily hammer on the chart here. You also have a pretty nice size gap right here. okay, up to potentially the 373 level. There are gaps up here, but I don't think that's going to fill anytime soon unless there's some good news, some pivots in the in the macros. But I would say, at some point this week, I'll put a target here to see this gap fill at the 373 level, and then we'll go from there. You obviously, as a bull, all right, we need to hold this 363 level, or else that 360 will come pretty darn quick, okay? And below that, it's going to get even crazier, all right? So we'll just put it there, 360 range, all right? So 373 upside target. Let's see that gap fill, and we'll go from there. All your short-term EMAs are rolling over here. Even if we get a big counter trend rally, I mean, the best that I could see for SPY going into this week is 383 or 382, which would be the EMA 9 on the daily. All right. We saw that even with the rally after the FOMC decision on Wednesday, you saw that it hit that EMA 9 perfectly and fell and just crashed. Okay. So that's going to be an area that's going to be a big resistance. But let's just see that gap fill at the 373 level. Okay. All right, folks, let's go ahead and check out some other names. NVDA, a big name this week. 141, hit 140. Exactly. Gave you a gravestone doji and completely collapsed. I drew this chart back last week and it hit that 122 target as unbelievable. Absolutely unbelievable. I did not think that NVIDIA can actually go that low. Look at this level here. If NVIDIA does not pick up, now we did get a little bit of a rally at the end of the day, and NVIDIA actually ended up green on the day. So if it cannot hold this 122 level, boy, 115, that's not going to look good for the tech sector. All right. AMD also getting smacked around a little bit too, right? But you don't have there's no gaps to fill here, it looks like, for the NVIDIA here. So I would say you got to see something. If there's a rally in the markets, all right, resistance is just going to be that 131 area. We saw that the NVIDIA started hanging around 134, and we can see that this was pretty much a bear flag here, and it fell off and broke. But 131, you should be able to see some type of rally going towards this market on NVIDIA, only because obviously the markets are oversold. If you look at the CCI, et cetera, all oversold as well. Okay, since we're talking about NVIDIA, let's talk about AMD. This isn't a terrible, I mean, obviously all the charts are looking terrible for the bulls. However, you do have an evening star here. So this is looking a little attractive at this point for AMD. If the AMD cannot support the $68, $68, look at, good Lord, it filled the gap. Let's see. Yeah, it filled the gap all the way back to July 2020. But folks, we have a gap down here at 64 level, down to 62. So those are going to be your key areas to watch as potential support here as the $62, $64 level. However, okay, with that being said, you have a kind of gap down evening star here. I'm sorry, morning star. Look at this morning star here. Look at this morning star here, just for a brief rally. All right, that's an evening star. There's a bunch of morning stars on AMD. Morning star here, all right, and saw a rally. Morning star here, saw a brief rally with a little gap up here. Morning star here as well. So it seems probable that this little morning star here could trigger some type of rally back up towards the 70, towards that $70 level. So if we get some good markets on the week, watch out for NVIDIA. $74 would be a form of resistance. But of course, if we don't get any rally after it breaks that 66, boy, it's coming down to fill this gap from the 2020 level, which would be down to the $62 level. All right. And as I always say, once again, if Apple goes, so does the market. Look at this. All right. You have a hammer, just like most of the charts, the Qs and the SPYs on a daily. You have a hammer here. Remember this hammer back on September 16th? And look at what happened. it ripped, right? Ripped all the way. I mean, tried to break all of the EMAs in one shot here and failed miserably at the 158 level, which would be your EMA 34 and 50 clouds up there. Okay. But you're going to meet some resistance at 152. Okay. Downside target this week, if we don't get that rally, it's going to break that 150 level and dip right back down to 146, which should hold as some type of support if we don't get that rally. Maybe a little bit of bounce here, maybe a little consolidation. But if we are to kind of start moving back up or get a little bit of relief rally, 152 is where I think Apple will go. And if it goes a little further above that, you're looking at about 153.82, 154 before it hits that dead stop at EMA 9 on the daily. We saw that happen, right? We saw that happen on Thursday, hit that EMA 9 daily and fell back. Okay. So that's what we're looking at. 154 upside target, got to break to 152, or we're going to 146 for Apple going into this week. Okay. Last one, I think I'll do here. You know, if you guys know me, I always covered the tech sector. All right. This is like where I'm most, informative and knowledgeable. So this is the sector I choose. All right. If you guys look at what happened on Tesla, from the last week video, I said, 313 is going to be the target. All right. So we hit that on Tuesday, or I'm sorry, Monday, Tuesday. Tuesday, Wednesday. All right. And we're pulling back very, very quickly here. You look at the stochastics on the Tesla, still a little bit more room to go. Definitely a little short signal is in. All right. And also but the CCI is now deep in the oversold territory. Tesla held 272s and 273s going into on Friday. All right. So this is going to be an area of contention, 265. All right. If we start losing that 275 area, guess what, folks? 265 is going to be a target for the downside. You know, this is 3 black crows. This is not looking very constructive at all. However, if we get a rally, all right, SMA 200 lines right here. All right. Let's see if we see a rally back over 292. That's quite a jump, I know, from 275. However, that SMA 200, if we can break 280, it might just start rallying back towards that and before falling back down. All right. So this is not looking very constructive. If you are a Tesla bull, you got to hold this 265 line. So I'm going to put an upside target 292, SMA 200 for if we get some type of relief rally for Tesla. And if the markets rally, Tesla can pull a 10, 15 point kind of day. That's just the nature of Tesla. All right. So, all right, let's go to questions on YouTube and Zoom. Do you think eventually close that gap around 250? Yes, all gaps fill 80, 90% of the time. I didn't see that. That's very good. Thank you for pointing that out. So yes, you do have a gap, 254 down to 250. Okay. At some point, yes, I think Tesla, the way that this market is going, it definitely can hit that, right? Before I go, let's take a look at VIX. Obviously, that's very important going into this coming week as well. All right. That's your classic shooting star, right? This is your classic shooting star on the upside on VIX. Okay. We got rejected right near the June highs. All right. The June highs back in the 32 level. All right. This looks like that gap is just never going to fill at the 21 level. But guess what, folks? There's some relief coming, I think, right? You got to speculate at least a relief is coming because the VIX is overbought. All right, significantly. All right, you look at the stochastics and the CCI. Whenever VIX reaches this level, I'm not saying it will on Monday, but you look at the June highs. I'm sorry, the April, May. All right, downtrend or uptrend here. All right, you look at the June highs. You look at the mid-August highs as well. Tends to fall back down. Okay, so if there's any type of relief rally, you should see the VIX come back down or cool off, potentially for another run here. Certainly, the market wants to price in that 4.5%. Where it might end up, where will we be at 4.5%? Not sure. Not smart enough to say that. However, at some point in the next week or two, the market is going to start looking at the CPI data coming in October, which would be October 12th, okay? And that would be a Wednesday morning as well. If that CPI comes in even hotter than what we've seen in the recent CPI, then I do believe that the market is really going to price in at 4.5%, but expect that bounce right into that CPI, some type of counter trend rally in the next couple of weeks. So, all right. For sure. Let's go over to YouTube. Okay, no questions on YouTube. Okay, sounds good to me. Good morning. Let's see. Like the hammer with the rich bought puts at the close. Yes, sir. Definitely scary. Yeah, you know what? I mean, I'm here talking about, potential bounces, and but I am holding puts over the weekend just to see a gap down, a potential gap down, because we've seen, if you look at the minute charts, let's just say I'm going to go on a 5-minute chart, all right, with the after hours. Okay, every time we get over this past week or so, you notice that every time we get a little rally at the end of the day, it ends up gapping down, right? And so I like my chances with some slight puts, not a big position for Mondays, just to see if I can cash out, right? Maybe we open up, back down at the 272 level will be fantastic, and I'll just call it a day on Monday. All right. Yeah, I don't know what the flow is or what it looked like at the end of the day on Friday, but I'm certain I thought I saw some big money coming into puts, or the October 21st 350 strike, I think, on the SPY. I think that's what I saw, but I'm not so sure. So yeah, that's it could get interesting on Monday for sure, right? Okay. With that being said, 26 minutes in, I think we're good here. Hope you guys enjoyed it. This was informational. If you are part of the group here, I will drop this video in the group chat. So I think we're done here. I'll go ahead and end the meeting here. Hope you guys have a fantastic weekend. Get some rest. Stop worrying about what the market is going to do on Monday. All right, rest the mind. You need a recharge. It's just been a whipsaw, crazy 2 weeks. And if you're a newer trader, maybe you started in 2020, your objective right now is to preserve capital, right? Preserve capital and do your best to survive this bear market, because eventually all bear markets have to end. Okay, I know the macro traders in the world on FinTwit and Twitter is telling you that we're going to zero and the world is ending and China's going to take Taiwan in the next 12 months and we're screwed. And it's the book of Revelations. While I do believe in the book of Revelations, I just don't think it's going to be, anytime soon. Market is definitely risk off. Don't be a hero, right? If you are a bear, I mean, I've made those mistakes, right? Not believing in a rally, not believing in a relief bounce, just buying puts at resistance levels and just getting screwed. All right. And also, you don't want to be the guy that's buying every single dip. Okay. Play the minute charts, play the day without any bias. If we break new yearly lows, expect that relief rally to come. No bias, right? Like I said, bear markets aren't going to be forever. All right. Once again, the macros do look pretty bad. All right. But the markets are always forward looking. All right. With that being said, I think we're done here, folks. Have a great day.